It's great to have you here on the Clark Howard Show. You know, our mission is to serve you with advice and information that empowers you so you make better financial decisions in your life. And you may or may not be aware that the condo market is going its own way, separate from the single-family home or townhome market in the country, especially along the coasts around the country. And this creates opportunity with possible hazard, likely hazard, if you are interested in being a buyer when there's far more sellers than there are buyers. And speaking of moving, do you know that more and more Americans, millions now, have moved overseas? What's that about? What's that do for you and your financial security? We'll talk about that later. So the condo market is in a slump like it's not been since the end of the banking scandals and the Great Recession. Condo sellers, if they have to sell, are having to take what the marketplace will pay them. And in a lot of places, it's like, where's the floor on those values? A lot of other condo owners who don't have to sell but would like to put a unit on the market, sits and sits and sits. Maybe the only offers they get are these lowball offers. They say, well, we're just going to keep our place for now. And there are a number of factors that are part of this. And I've talked about over the years how the way people buy condos is exactly backwards from what economics would say. Over time, you look longer periods of time, you'll see that condos and homes rise at pretty much the same percent over time. But in short cycles, condos ratchet up and down much more than houses do in value. Because the condo market, you're not just marrying that unit, you're marrying that building. And buildings take on kind of a life of their own and a value of their own. And the condo market's had unusual forces at play that have made it more volatile recently and more to the down recently than what goes on in the housing market, the general housing market. And I won't belabor the points because I've made them in the past in different ways, but the insurance risk for a condo association being able to insure, the shortage of reserves at condos. In Florida, as an example, the law requiring a plan for maintenance and repair and then catch up on the fees with huge increases. So a lot of condos have had deferred maintenance. That's a fancy term for like when you in your own house, you should have replaced the roof, but you didn't. You should have repainted, but you haven't. You should have repaired this or that or the other, and you didn't. In a condo, you're all in it together, and the fees that pay for a lot of the things have been going up, 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 and away. And so the condo market is going to find a new level, a new price level. And then it will hit its bottom, don't know when that's going to be, and then it starts going back up. So I want you to know that there is real opportunity right now if you got your eyes wide open. Because you have to account for the total cost, what that condo fee is going to be, what the taxes are going to be, what the insurance you have to pay, because a lot of the insurance is for the building, comes through the condo fee, what all those things are. And so you got to figure out if that good price overall, when you add everything together, is a good deal. And there are lots of deals out there. And you're buying at a good cycle. You're buying at a good time in the cycle because of the weakness of the market. And people that don't have to sell and are deciding they're just hang in there, eventually the market recovers and you'll be okay. But in the meantime, you'll have been paying all those taxes, the fees, all the rest. And you have to decide, is it better just to cut your losses and get out? Or do you want to be patient and wait for recovery? But the condo thing is kind of a unique thing. And the insurance market in general is one that has been a passive player in so much in the past and just calculates risk and quotes you a premium. But what we're going to see more and more is pricing signals from the market or imposition of requirements from insurers where there are so many things we can do that will lower the risk for an insurer of insuring our home or our condo or whatever. And we've not been about that in the U.S. I talked 2 years ago about how the state of Alabama on the coast region by the Gulf of Mexico had put in place very strict building standards and is, as best I know, the only coastal region in the United States that doesn't have an insurance problem or a premium problem because the building standards are designed to reduce the risk for insurers. That's the kind of thing we've got to think about in the housing market, not just condos, but with houses as well. How do we reduce the risk to us and to the insurance industry? Because the insurance industry is both a bad guy a lot of times and also a messenger. Don't shoot the messenger, listen to the message that the risk that you're creating is one that nobody in their right mind would want to take on as an insurer.
Okay. Anne in Vermont sent this question in. What's the best way to buy a house when you already own one? I'm 55. I plan to move probably in the late spring. I know ideally it's best to buy and sell at once so you don't need any loans, but I don't want to count on that timing all working out. And honestly, it would be less stressful to move into a new place first. My current house is paid for, and I will hopefully be downsizing. I live in an expensive market and will be trying to keep the cost under $600,000 if possible, and I expect my current house is worth about $700,000. I'll have about $150,000 available in savings and money markets by the time this comes around for a down payment. Okay. I've read online about HELOCs and bridge loans and borrowing against 401ks and getting a new mortgage and various other options. I have excellent credit. What's the smartest way to plan for this, and what options allow you to pay them off almost immediately? Because I would want to do that once I sold my current house. And side note, a short-term rental in between would be tough as the rental market here is insane.
Okay, so let's talk about this. So you made it clear you want the stability of buying the new place before you've sold the old one. You want shorter-term money, but with that, you're going to have a lot of closing costs. Borrowing from the 401k is, I don't recommend that as an option in this case because the amount of money involved. So I want you to approach two things. One, mortgage brokers, and you just tell them you're going to need short-term money for buying the new home, and when your old home sells, you're out. Or when you talk to a mortgage broker, you say, I want to look at low or no closing costs mortgages, where you accept a mortgage rate, usually a 0.5 point to 5/8 a point higher, and you pay that higher interest rate for the period of time, but you don't pay a lot of the normal closing costs, making taking out the loan a much more affordable option. The third thing is to go to a credit union near you in Vermont and see if they sell off their loans or they hold them in what's known as in portfolio, meaning many credit unions hold the loans on their own books and have a variety of loan products that would work for you that should be low cost for you to take out And this would be a case where doing something I always talk against would be, right, looking at a 1 year, 5 year, or 3 year ARM, adjustable rate mortgage, where it's a cheaper loan for you to take out because you're bearing the interest rate risk either year by year or after 3 years or after 5. And so that's a lot of stuff to say all at once. But the real target in your case is controlling what it costs to get that loan closed. That's your biggest expense that you want to avoid as much of as you can, not as much what the interest rate would be. And then you got to make sure the loan has no prepayment penalty, which is where you have to pay fees based on closing or paying off that loan extra early when your home does sell that you're in right now. So it's going to take a little bit of work, some time, but you'll get there.
All right. And Elaine in Virginia says, Verizon's promoting a Verizon Openbank Savings account. They offer open a high-yield savings account with Openbank by Santander Bank. How legitimate and safe does this offer sound?
Santander is one of the world's biggest banks. I think is how you say it. It's Spanish.
So.
I think it's from Spain, maybe. They have branches around. They used to have branches in the United States, I think, as well. Anyway, so these things they're loyalty things for Verizon to offer, that it creates another bond between you and Verizon, and the accounts are fully federally insured, and it's absolutely fine for you to use the Verizon savings account.
Stephen in Illinois is a man after your own heart, Clark. He says, I wear a Fitbit Charge 5 around my ankle, a Garmin Venue 2 Plus on my wrist, smart ring, not an Oura one, on my finger, Omron?
I don't know.
BP 8000 watch on a wrist.
They make blood pressure devices, so they must make a health tracker too.
Must be a blood pressure because BP 8000 watch.
So it is the blood pressure. Okay.
On the wrist. The most accurate step count comes from the Fitbit on my wrist, but it's even better on my ankle. Everything else gets confused if I'm pushing a shopping cart or a lawnmower. So I'm a skeptic as to the accuracy of the Oura ring for steps as well. Can you clear the air on this accuracy issue?
Sure. So I'm wearing 3 trackers right now. I have my Oura Health ring, I have my Samsung watch, and I have my Garmin fitness tracker. The one of the 3 that's really accurate on steps for me is Garmin. The Samsung is terrible if I'm doing something working out inside, or it seems even on a cloudy day it doesn't do a very good job at tracking steps. And I've never looked to see if Oura tracks steps. If it does, I don't even know, because I've been wearing a Garmin for so long, I can't even remember if it's 20 years now or something like that. I've been doing the Garmin tracking, and it hassles me all the time. So, Krista, how many steps does the Garmin say I need to do today?
Well, don't you set that up yourself?
No, it tells you.
I can't.
That's what's different.
So much
you can't
on there.
Read that? All right, so it's 14,930 steps.
Oh, okay.
Is what it wants me to do today. Yesterday it was 15 something. And so far today I've only done 4483. So it's been sending me electric shocks all day.
I have a friend who got I don't know which watch for Christmas, and she's like, I don't like that it tells me I should be moving or whatever. Like, she was really annoyed by that.
Oh, this one starts vibrating. The Garmin says, you're being too inactive. You need to get up and be active. And then if I do it, then it gives me like a double vibrate saying, thanks for getting out and being active. And so I would say that Fitbit and Garmin have so much history doing the fitness and running and all that, that what you're finding is probably true. And by the way, I didn't even know. Oh, look. Have you ever seen, you're an Oura wearer, have you ever seen, does it track your steps?
It does, but I don't wear mine during the day.
Oh.
I only wear it for sleeping.
Oh, it's really happy with me with my sleeping right now. says my average sleep score is an 84.
I actually took some time off from it, and I just put it on the charger this morning because I am going to start wearing it again because it was depressing me because I thought I got more sleep than it said I did. And I was just like, enough of this. Like, you think you wake up feeling great, and it's like, you did not sleep well.
Well, my wife Elaine laughs at me because she says, you don't know whether you slept well or not till Oura tells you.
Right. And or if you're going to have a good day, you're like, you wake up, I feel good. And then it's like, oh, your readiness score is terrible.
Yeah,
and you're like, wow, I'm not feeling well suddenly. What is wrong?
You need to take a day of rest today. It'll say that.
Yeah.
Or were you upset about something last night? Did you eat late last night?
Maybe I was upset about something. Maybe I should be.
Yeah. So it's the CEO of Oura says, if you start doing that, do exactly what Krista did. Put your Oura in timeout. Take a break from it, or any of these health rings. If you just become too obsessed, you got to put it aside for a while so it doesn't start running your daily happiness by telling you what your daily health is. But I've loved it. And the weird thing, it's been 2 years and a month since I had my heart valve replacement operation. And in the summer and fall leading up to that operation, Oura knew that my health was deteriorating. I could see it in the reports from them, and you look at the charts, and I could see that my heart was failing, that my valve was failing. And, it was clear as day as an indicator. So all it did was confirm what the heart surgeon told me was happening anyway. But as best I know, I'm doing okay.
You're doing great.
Yeah, we'll see. Coming up ahead, what happens if your money says, I can never retire? Let me tell you what more and more Americans are doing straight ahead. I know someone who is 60s, I don't know exactly what her age is, but somewhere around late 50s, early 60s. What happens if I'm really wrong on the age? And she has not been able to save a lot of money towards retirement. And she has come to a decision that when she hits retirement age, she's going to go live overseas. And she's going to Central Europe, where some of her family still lives, and she's going to live there because she says she can live there for 1/5 the cost, 1/5 of the cost of living in retirement in the United States. And one estimate I saw recently is there's now 4 million Americans who are living semi-retired or retired outside the United States. And I saw an item recently in the Wall Street Journal that this is like a magnet right now for middle-income Americans to move somewhere else. Historically, from Texas to California, a lot of Americans have retired in various communities in Mexico, and there are a lot of retiree American expat kind of neighborhoods and communities that are across Mexico. But that's just the tip of the iceberg, because now Americans are going all over the place. Portugal has been a very popular spot for Americans to retire, but it's not any one place, it's all over the place. And it's because if you're one of the 1 in 3 people who what you really have to live on in retirement is just your Social Security, it's not enough to survive in the United States. And that's leading more and more people to look not wanting to work the rest of your life, which is, I hear people say that to me. Well, I've never been able to save, so I'm just going to have to work till I die. This is the escape hatch. This is the alternative. And it doesn't have to be that dire that you could never retire here, but you could retire somewhere, whatever there is, wherever that is. But there's something else as well, and this is what the Wall Street Journal story was about, that people who are middle income, who can retire but would have a lower standard of living and retirement here, are choosing to go. They don't need to do it to retire, but they're choosing to go live somewhere else to have a better lifestyle. There are a lot of questions about how taxation would work, how safe a place is, how you get medical care when you need it, because medical care is really variable within the United States. Think about how variable it might be depending on where you would go settle somewhere else in the world. My key rule, if you're ever thinking about this, is that you do not buy a place right off the bat, that you go test the waters. Even if there's a place you've gone to, let's say you vacation in Costa Rica over and over and over again, and you love Costa Rica, and you're thinking, I'm going to live there when I retire. Test drive it first in retirement as a renter, because it's different when you go somewhere episodically a week at a time versus living there 52 weeks a year. And that's why you go test drive it. And what you think you want may or may not be. And also, if you rent first, you'll figure out where you really want to be and what fair value is. Very hard to do that as somebody who even vacations somewhere regularly, to know true fair value and where you'd really want to settle. Krista, if you could live anywhere on earth, you could not live in the United States anymore.
Oh.
You had to leave. Where would you go?
I don't know. That would be so hard to choose.
Oh, I know. I know where I'd go.
I mean, I could think of a lot of places I'd love to live. Italy. South Africa was incredible. Australia is awesome. I don't know. I could live in a lot of places.
Australia in a second.
Really?
Australia is where my imagination is where I'd want to be.
Yeah, I guess imagination. I, of course, think, well, my kids are still in the U.S., I don't want to be that far,
Do you know that I can't move to Australia,
Why?
even if I wanted to? Because Australia won't allow somebody who's older to move there because the health cost burden you might represent to them.
Wow.
So you can be there, you can go over and stay for like a season or something, but you can't move there under most circumstances once you hit a certain age. And you have to do a medical background where they decide, nope, this one's out.
Oh, wow.
This one's okay, that one's not.
All right. Well, Clint in New York has a question for you. He says, I want to encourage my niece, who is currently in junior high, to save money. My plan is to set up a joint savings account at a local bank or credit union, matching her contribution dollar for dollar. I know you've spoken about college savings plans, but who knows if she will even attend college 6 years from now.
Okay.
The only catch is that she's not to withdraw one dime until she turns 18, at which time she is free to spend the money any way she wants, or hopefully keep on saving. Many years ago, my father opened up a passbook savings account for me at a local bank. He provided some seed money and also paid me to do odd jobs around the house. I mowed neighbors' lawns, shoveled sidewalks, sold vegetables out of our garden. My joy was depositing the hard-earned money into my account and watching it grow. I remember graduating from college with $3,000 in the bank. My savings and investment trend continued throughout adulthood, and I never thought I would accumulate this much money. What do you think of my plan to encourage my niece?
I love it. I love it. Now, let me first double back to the 529. From a practical financial standpoint, the 529 would be great because now with the 529, if a child doesn't go to college, the money morphs tax-free. You have to go through a process, but it morphs tax-free into a Roth IRA. So you would give your child an enormous opportunity. Oh, your niece, I'm sorry. Niece. Not child. Mm-hmm. You'd give your niece an enormous opportunity for a head start towards financial independence later in life by the money not being needed for college, grows tax-free, then transitions tax-free into a Roth, grows tax-free, and then way down the road is spent tax-free. So just from a financial standpoint, that is the best answer, but not necessarily the right answer in this case, because you're trying to create a lifelong habit of living on less than what you make and seeing the advantage of building up money over time. Today, I'd say instead of a savings account for your niece, I would, if your niece is 13 in junior high, probably already 13 to 17, you can open a youth account at Fidelity Investments. And so a 13-year-old is given the ability to learn how to invest, has decent control over the account with you overseeing it, and is able to invest instead of save, and learns the principles of investing, being able to put money in Fidelity Zero funds that have no cost, the account has no cost, and teaching a teenager how investing works, I think, is invaluable. But doing what happened in your life with seeding money in savings and having it grow and then be theirs at 18, just like you talked about, that's great too. So I'd say you've got, this is like, what was that show that used to have door number 1, door number 2, door number 3? Mm-hmm. Is that called Let's Make a Deal?
I think so.
Whatever that was.
They also had that in The Price is Right.
Oh, why am I even talking about game shows on TV? I know nothing. But the idea is there's more than one way to do this, and I'd say all 3 of those would be great options.
Scott in Florida says, the mySocialSecurity website now only allows sign-in from id.me or login.gov. Various sites on the internet are critical of both for privacy reasons. What is your recommendation?
So, gosh, I chose, and I'm not a technology expert, but I chose to do login.gov. I felt more comfortable with it and the protocols with it. But the reality is any site that you sign into, there's risk involved with it and hacks happening and all that. But it's important for you to have a mySocialSecurity account just to make sure nobody is impersonating you and going after your Social Security money. And you can also check your records to make sure you're being properly credited, because your earnings over most of your working lifetime, 35 years I think it is, establish what you're going to receive from Social Security based on the year that you decide to take it. So there's always a risk. There's also a risk in not having an account, which you don't know could hurt you. And that's why I think it's worth doing. And it'd be great to hear from some security and technology experts if I made the bad choice doing login.gov and I should have done id.me, or which one has, in their opinion as an expert, less or more risk.
Tom in Texas says, we have T-Mobile wireless internet and 2 phone lines. I don't see on your cell phone recommendations anything about moving the internet service when we move the phone service. The internet service is great for us. We can stream movies and surf the web. Okay,
this is a great question. So if you dump T-Mobile for your cell phone service, I had this question before, and the best answer I could come up with is standalone internet service from Mint Mobile, which is actually a discount arm of T-Mobile. So if you know the T-Mobile home internet works at your address, you dump T-Mobile for your cell phones, they're going to clobber you on the home internet. So if you migrate your home internet to Mint Mobile, same service, just lower price, you'll get whatever better deal you're going to for your cell phone service, and you won't get a much higher bill for your home internet. So that's how I'd handle it. And today is Dr. King's birthday. And I did not know Dr. Martin Luther King personally. And I don't know how you feel about him, as a historical figure, but I believe he was a man of incredible courage and is one of the principal reasons that the southern states of the United States have had such enormous economic growth, because it created a safe environment for companies to feel like it was okay to invest and build factories and build headquarters and all that in the South. But it was so much more. He was so much more to me than that, because he preached nonviolence through his entire life. And what a tragedy that he lost his life to violence after preaching nonviolent change. And a man of he wasn't a cartoon character. He was not a perfect man. He was someone who did some things in his personal life not so great over the years. But he stood up for what he believed with incredible integrity and fearlessness. And so I think it's important to recognize him on this day in honor of him for his birthday. And it's not his actual birthday. His actual birthday is the 15th of January, but like so many federal holidays, they're celebrated on a Monday close to it. But thank you for joining us today. And I hope today you learned something that empowers you in your life and gives you more tools to protect your financial security or grow your financial assets, or think about something in ways you haven't thought about it before. And know what we're about. We're about that empowerment through knowledge, so you can save more, spend less, and avoid getting ripped off. And every day, all day long, 24 hours a day, Clark.com and ClarkDeals.com are there to serve you with information that will empower your wallet or stretch every dollar.